Good morning, everyone. I want to welcome you to Excel HR's webinar, an employee's guide to the updated W-4. We will be addressing the 4 different sections of the new W-4 to help you and your employees understand the withholding calculation process. The new W-4 is split into 4 different sections: personal information, multiple jobs, dependents, which you can claim on your tax return, and other adjustments. We will be having a question and answer session at the end of the presentation. You can raise your hand to ask a question or submit your questions using the Q&A feature. My name is Diana Thomas. I'm an enrolled agent with over 25 years in payroll tax compliance. The enrolled agent status is the highest credential the IRS awards. I've also held a certified payroll professional designation before becoming an enrolled agent. This is the newly redesigned IRS Form W-4 for employee withholding. Became effective January 1st. And that was due to the changes in the Tax Cuts and Job Act. The use of the allowances on the personal tax return was eliminated. The IRS revamped the W-4 to flow more like the individual income tax form 1040. The new 2020 IRS W-4 has 4 different sections: filing status, dependents, other income and deductions, as well as having multiple jobs. The goal of the new W-4 is to have your withholding as close as possible to your actual tax liability on your personal income tax return. So the first information that you're going to be requested is your name, Social Security number, your address. There's also a reminder to verify your name and Social Security number with your Social Security number card. If it is incorrect, your name and Social Security number, and it's filed with the SSA office for your W-2 earnings, you only have a little over 3 years to correct your statement. The Social Security Administration Office has over $1 trillion of earnings in which they have not posted to any employee's file because of a name and Social Security number mismatch. This normally occurs when your employees get married or divorce or end up going to court and having their name changed. So it's always a good idea to remind them to verify this information. The Section 1C concerns the filing status. This selection determines the standard deduction amount and the tax table used in calculating your employee's withholding. To assist with the employee's withholding, the IRS made an online withholding calculator. They go through each step of the W-4 to determine the correct amount of withholding needed to reach the closest for your taxable income. They'll go through and they will ask, if you have 1 job, 2 jobs, if you're married, if you're single, if you're filing for as head of household, if you have any extra income on the side that you don't have withholdings for, or if you have high deductions. And they go through all of those questions and come up with an estimated amount of tax that you're going to be liable for. Then they also ask you how much your year-to-date withholding has been so far and take the difference. And if you need an additional withholding, they'll produce a W-4 for you that you can go ahead and submit to your employer and payroll service provider. So for withholding pay tax on a weekly basis, because the IRS has a graduated rate table, they range from 0% to 37%. Some employees do not have withholding. And then when they file their tax returns the following April, find out that they owe money. And that is because with this new system, they give you a standard deduction, which is like $8,600 for single, $12,900 for married filing jointly. And then the tax actually starts, if you make more than the $3,800, it starts at the 10% bracket. And so what they do is they calculate your weekly pay, multiply it by 52 weeks, and come up with your annual salary. Then they take the annual deduction and subtract off the minimum, and then start your withholding calculations. So as you can see, for being a single employee that you have, you would have to make more than $240 a week in order to have any withholding taken out. If they're married filing joint, they would have to make more than $480 a week. That's why it's always good to go ahead and check your withholding at least twice a year. Make sure that you're still on track. Here is the 2020 wage bracket for a single individual. So tax rates range from 10% to 37%. And so they'll tax the first, $9,800 at the 10% level. Then the next $30,000 they'll tax at the 12%, and so on and so forth. So this is what's called a graduated rate tax system. So the 2020 percentage method tables are what are used for calculating the withholding tax for an employee. On the left-hand side of the page, you'll see the standard withholding rate schedule. And this is used on your employees with just the single jobs. On the right-hand side, you have the tax table for the ones with multiple jobs. So step 2 on the new 2020 W-4 concerns multiple jobs or the spouses working. So if you have more than one job in your household, you need to go ahead and mark this box here. By marking this box, the withholding calculation will be used using the correct table, the one on the right-hand side, and it'll come with more withholding being withheld, which would match the individual's income tax return. So here's an example. We have an individual. She makes $40,000 in her regular job, but she also has a secondary job that she works on the weekend. So for each employer, she submitted a W-4 just saying that she's single and zero. So the calculation was made. The top half is the 1040, and the bottom half is what she had withheld. So as you can see, the total tax owed for the single individual making $40,000 was the same amount that was withheld for the calculations of the new rate schedules. The same goes for her part-time job that she has on the weekends at night. Since it's in a lower total wages, she's in a lower bracket, she pays less taxes after her standard deduction is withheld, but she had the exact same amount withheld from her paycheck during the year. But the problem occurs is when she files her tax return the following April. She has to combine both of those wages, and that brings her into a higher tax bracket. So now she's in the 22% tax bracket. For the first job, she was in the 12% tax bracket. Then she was in the 10% for her part-time job. But when she combines everything together, it's now coming up to be in the 22% tax bracket. So the total tax that she owes is now $4,700, but her paychecks only had $3,200 withheld, and she's going to be owing $1,500. So now the employee is subject to penalties and interest and is not very happy. And she's going to go to you, the business owner, and ask why. And so then we go ahead and explain it's because both of the jobs, we should have had that box marked as 2 jobs. So therefore, we would have a little bit more withholding to our credit when we filed our tax returns at the end of the year. We also need to be very careful when we're completing step 3, claiming our dependents. We want to make sure that the number of children or other dependents, as defined by the IRS regulations, listed here are also going to be on your individual tax return, as this is a dollar per dollar reduction on the taxes withheld. So I have 1 child under the age of 17, so I'm going to get a child tax credit for $2,000. So on the other individual's return that we just looked at, it will take that $4,700 and subtract dollar per dollar, $2,000, so now we only owed $2,700. We just want to make sure that whatever is listed here, we have on our tax returns because it'll be a dollar per dollar tax reduction. As the other adjustments, we have other incomes and other deductions. This is going to be added or deducted from our taxable wage before the tax is calculated. And then they'll determine how much is supposed to be withheld. So on other income, it can include money from a side job, such as bookkeeping or being a handyman, or having retirement income in which you don't have any or not enough withholding on. Deductions include like high medical bills, real estate taxes on your home or second home, state and local taxes, mortgage interest, charitable contributions. The total amount of deductions, if it ends up being more than your standard deduction of $8,600, you'd want to go ahead and put the difference here. And then those will be, the other income will be added to your employee's wages, and then the deductions will be subtracted. Then the calculations will start for the amount of tax to be withheld. Extra withholding, a lot of times some tax accountants advise you to have an additional withholding amount deducted from every paycheck. So 4C is where you're going to go ahead and put that amount, and this will be in addition to every paycheck that you have. So what we want to make sure of in the end is that the W-4 closely matches your individual income, deductions, and credits that you're actually going to file the following year to your actual tax liability and not create undue stress when it comes to tax time.